because you'll be recorded. Thank you. Okay, you'll be eligible for a final quiz. We're going to have a quiz at about 9:25, and the top 3 winners of the quiz will win a $10 Grab voucher per person. No need to share. Not $33. How much? $33. $3.33. Yeah, no. Okay, it is $10 per person. Yeah, so please do stay on all the way until 9:30. It's very fun. And the quiz questions are not those very simple to answer one. You really do need to pay attention. Then you can answer. And if you can answer, I promise you, your financial situation will be a lot better from today onwards. Not overnight. Tonight, we're not teaching you how to get rich quick. Okay, that one you have to attend other webinar. By the way, if your friends tell you how to get rich quick, quickly change your phone number. Okay, quickly block your friend. There's no such thing as get rich quick. And who agree with me? Please put yes. There's no such thing as get rich quick. Even Bitcoin is not get rich quick, right? Monique say yes, Yuan Tai say yes, Jeff says yes. Well, there are 2 Jeffs tonight, Jeff Louis and Jeff To. Jeff is such a popular name, huh? Yeah. Who else agree? Jeremy, you agree or not? Okay, there's no such thing as get rich quick. Some people say property get rich quick. Obviously, never studied property before. I think Jeremy quite familiar with properties, right? Property, you need a few years, okay? Yeah, a few years already considered quite short already. Okay, no get rich quick. I've been in multi-level marketing before, 2014. So I have some experience with it. It is also not get rich quick. Okay, anybody who wants to be very serious in MLM will have to at least do it straight through for 3 to 4 years before you see some so-called passive income. Okay, but tonight we're not going to teach you MLM. That one, some of you are experts. I'm not an expert for that. Yeah, I call your name many times already, but some of you still never show video. Hey, Jeff Louis, I know you're full of muscle. Please. Well, I didn't realize your surname is Louis. Tonight is a perfect webinar for you. We are all about 6 kinds of Louis tonight. Hey, hello, Mr. Louis. Can you show video or not? Yeah. So yeah, I'm a bit corny sometimes. Yeah. Some people like my joke, some people don't like my joke. Yeah. Just forgive me lah. Pretend I never joke. Okay. Please take out your paper and pen. Quickly. Take out paper and pen. Because tonight we're going to learn 6. Okay, not 3, not 4, 6 passive income stream within 1.5 hours. Okay, that is very, very ambitious. So we're going to talk very fast. Okay, later comments section, don't say, oh, Yuan Tai talk very fast, Eugene talk very fast, Erwin talk very fast. We have no choice. We have to talk very fast. Okay, 6 income streams every single. Oh, Jeff is still in the fitness studio. I just came from his fitness studio and I rushed all the way, traffic jam, and I reached my computer at 7:56 p.m. Yeah. Wow, that's how important Jeff's fitness class is. And Erwin and I are going to Jeff's fitness class this Friday. But tonight is not about Jeff's fitness class. Okay, tonight is about wealth, not health. For health and another class. Okay, please write down the 6 passive income stream, and then you must write down which of these 6 is the most relevant for you. Okay, so all of you here will have different kind of risk appetite. So please, if your risk appetite is not the same as Yuan Tai, then don't go and do the same thing as Yuan Tai. Understand? Your risk appetite must match Yuan Tai's one before you go and follow his advice. Okay, so Yuan Tai has slightly higher risk appetite among the 3 of us. I have middle appetite, and Erwin has the lowest appetite. Yeah. Okay, so later you go and match your risk appetite and then do what each of us do, and then you'll be fine. Okay, if your risk is different from our portfolio, then I guarantee you're going to get into trouble. Okay, in my lifetime, which is 46 years, I know. Some of you think I'm 26. I'm 46. Okay, I'm 46. Okay, don't vomit. I see Monique going to vomit already. Okay, so I'm 46. Yeah, and 46 is a long time on Earth. Can you imagine going to Europe for a holiday for 46 years? It's a very long time on Earth. Okay. Wesley is only 12. It's almost like just a passing summer camp. Okay, 46 is a real half time on Earth, and I've seen many people lose their money. Some of them were very rich before, stay in landed, those property, good cars, bungalow, and they had to sell it because they bought the wrong stocks. Some of you may know High Flux story. High Flux, the founder, very, very rich, right? And then the company doing very, very well, and then just like that. Just like Thanos, snap finger, the company is gone. Okay, there are so many such companies: Kodak, Nokia, And then Olam got into trouble. So SPH got into trouble. So recent CapitaLand went restructuring. I tell you, all the so-called very good companies all went into trouble at some point. Right. So far, none of the companies ever lasted 20 years. Okay, Amazon maybe. Yeah, other than Amazon, very few companies you can see will last forever. Okay, so I've seen it all. And I see people who are very poor become very rich overnight and then become very poor again because they have always been speculating. By the way, anybody who is in Ethereum, Bitcoin, or the cryptocurrency, right, please stop calling it investment from today onwards, okay? That is speculation. By the way, I also speculate, okay? So I'm not judging you. I also put a lot of money, not a lot, I only put 20K into Bitcoin and Ethereum, doing very well for me because I bought at the right time. But I don't dare to call it investment. Please don't call it investment. Okay, NFTs, don't call it investment, please. Okay, horse racing, don't call it investment. Go to Resorts World, don't call it investment. Okay, not everything in life is called investment. These are called speculation. So tonight, the 6 income streams are all real, legit investment. Okay, no MLM, no horse racing, no NFTs tonight. That one you have to attend other webinars. Okay, without further ado, I'm going to introduce Erwin. He's our first speaker for tonight. He's going to share a few newspaper articles that he has been cutting. Hey, by the way, he's very young. Yeah, but despite his youth, he has been reading a lot of articles, and the articles are very, very shocking. Okay, so please, you don't have to read newspaper articles, just read his newspaper cutting, and then that will give you some shock. Erwin, over to you.
Thank you, Eugene. All right, everybody, welcome to the talk. And as what Eugene said, I'm actually quite young. I hope I'm still young. I'm currently 25 this year. So my friend also called me an old man in the group, in our friends group. People young at heart. I'm the guy that is old at heart. So I also had quite a lot of newspaper articles, as Eugene has mentioned just now. And there's some surprising things, right, that I really think that a lot of us should know, but is unaware of. So the first one is actually from Saif, one of the top robo-investors in Singapore. And actually, according to a survey that they have done before, 60% of Singaporeans do not have enough savings for retirement. And also in another one, 1 in 2 Singaporeans underestimate how much you need for retirement. And some people don't even know what retirement means. Is there still income? Where is my money coming from? Is there like money that I can pluck from the tree? So this is not just for regular everyday Joe. Even the top earners in Singapore, $20,000 of income per month, also have trouble starting their retirement planning. Why? Why is that so? And also a lot of top earners they leave the cash idle. Yeah, so the keyword here is cash. So we actually boil it down to 4 major problems, and we are going to share them with you today.
So I'd like to ask, what are some of the considerations that a person should have when they are topping up via the retirement sum topping up scheme?
Yeah, that's a very important question, especially for those of us here who are in the 50s and you're reaching 55 soon and you're thinking, oh, should I do that, right?
Sorry.
I just illustrate the concept of using this mother hen and golden eggs. The money that we have set aside at 55.
Hey, sorry. Sorry, who's speaking? It sounds like another webinar, It's not our webinar.
Is it?
Yeah, it's another webinar. Somebody is watching 2 webinars at the same time.
I thought it was a question for us.
No. Yeah.
Okay, sorry about that.
Continue.
Okay, so where was I? The 4 problems that we boiled down to. The first is that a lot of people actually cannot control their spending. Can I just check with everyone over here? Can I have a show in chat? Do you know somebody that is unable to control their spendings? So for example, instead of going to the coffee shop to buy a simple cup of coffee, you go all the way to Starbucks and then for $5, boom, on coffee. Is there anyone over here that knows such people? Please put yes in the chat. Me, Nita. That's actually very self-aware. It's good that people are self-aware. Is there anybody else? No, nobody? Many. Yes, from Eugene, many. Jeff as well, yes. Okay, so Yan Tai, thank you very much. So we actually have a lot of people around us that is not able to control their spending. There are people just going to the, it's not the basic cost that we're spending. We're spending the extreme superior amounts. So Starbucks, $4, you have a simple coffee for $1 or maybe $1.20 after inflation nowadays. And also the next one, there's no financial planning. Some people, they maybe plan for tomorrow, they plan for next month, next year, but is there planning for 10 years later, 20 years later? Is that where is the long-term planning for this? Not a lot of people have it. And also, cash is king mentality. This is actually one of the biggest fallacies over here. People keep their cash as cash. So what happens is you have liquidity. You can spend the money whenever you want, very easy. It's just in a bank maybe for you. Just take it out per day. Every day. You want to spend, you spend. But that liquidity comes at a cost, which also links to our fourth point. People are not staying invested. The money is rotting in your bank account every year due to inflation at 3%, whereas your bank deposit usually is at 0.05. So we are going to share with 6 instruments, as Eugene has mentioned just now, and they are actually categorized into 3 pillars of retirement. So I just want to have a show. Is everybody ready to be the 40% of Singaporeans over here that is wanting to know what it takes for retirement and be prepared for retirement? Please put yes in the chat. Monique, thank you. Jeff, thank you. Yantai, thank you. All right, so where's the rest of the people? Are you not going for the top 40% in Singapore? Isn't that why you're here in this webinar? Okay, never mind. I hope that you guys still can learn from this. And we're going to continue on. So the first pillar of retirement is actually via investment. And Yuan Tai is actually here to share that with you. So a bit of background on Yuan Tai. He's actually a very experienced investor. As what Eugene has mentioned just now, he's also a high-risk investor. He has also been investing all the way since his uni days, since he was 19 years old. I'm 25 this year. So he's 19 years old, 6 years younger than me and already doing investments. And in fact, right, he's also been invited by the Sunday Times to share how him and his wife manages their couple's finances together. And it's great honor to have him as my colleague over here and also to invite him to share with you his tips on what he does with his investments. Yuan Tai, please.
Thank you, Irvin. Thank you. So during this COVID, most of us are trapped here in Singapore. We cannot go anywhere else. So I've decided to start a hiking and a cycling hobby. So I was cycling from my home in Hougang to Chinatown. Oi! What? Why are you carrying your bicycle? I'm carrying my bicycle because I don't know how to ride lah. You don't know how to ride your bicycle? Then learn how to ride your bicycle. Ladies and gentlemen, a lot of us work hard and we use our money and put it inside the bank doing nothing. So it is as if we are carrying our hard-earned money and struggling towards retirement, letting inflation steal away all our hard-earned money. But who is here tonight in the next 1.5 hours to learn how to ride our bicycle towards a happy retirement? Please type happy inside the chat box right now. Who is here to learn how to use our money and ride towards a happy retirement? Mark, Nita, Monique, Jeff, Wesley, Erwin. Who else is happy? Junie, Deborah, Georgina, Daniel. Thank you, thank you. So in the next 20 minutes or so, I'll share with you the first 3 pillars, and it is based on my experience I'll be sharing from my experience and to let you understand a little bit about the first 3 pillars. So a lot of us, before we start, a lot of us think that we know how to ride our bicycle, but a lot of us end up doing this. Recently, I spoke to a few of my friends. They went into crypto and they made some money. At the start, they made some money, but recently crypto crashed and then they lost a lot of money. We end up doing foolish and dangerous things with our money and end up like that. So just a quick disclaimer, any names that I mentioned inside, please do your due diligence. Tonight is not a stock pick session, but it is an educational session. Without further ado, the first stream of passive income, property rental. So this photo is my studio apartment on the 35th floor of Manila. It's a freehold, 27 square meters, about 400 square feet, and it comes with a parking lot. Ladies and gentlemen, please type inside a chat box, how much would one studio apartment, 35th floor right smack in downtown Manila, in the Orchard Road of Manila, how much will it cost? Freehold studio apartment. Please type inside the chat box in Singapore dollars. Make a guess. How much does this studio apartment cost? Please type inside the chat box. Let's have some responses. 1 million, Monique. Not in Singapore dollars, I hope. 500,000, Wesley. Jeff, 300,000. Victor, 150,000 US dollars. Any more guesses? Make a guess, make a guess. How much is this beautiful studio apartment? How much does it cost? Comes with your parking. So you have to pay for parking as well. It works a little bit differently in Manila. You can actually rent out the parking space, 80,000, Caleb. Okay, 110,000 Singapore dollars is how much it costs for me, freehold apartment in Manila. And you ask, how should we get started investing in overseas property? Why did Yuan Tai look at overseas property? Obviously, number one reason is the quantum is low. So how do we get started? Let me just give you a brief guide. Choose a country with good yield. And you can see I've done my research. I did quite a lot of research in it. Monique, UK, yeah, there's also a possible avenue, but in terms of UK properties, the quantum is of course much higher. It's almost like Singapore if we are talking about London properties. So why Manila? Why did Yuan Tai choose Manila? Because you can see rental income yields of top 5 countries globally. 2 of them are in Southeast Asia, Indonesia and Philippines. Philippines, talking about rental yield, we are looking at about 6%. For Singapore property, rental yield is about 3%. So you got choose a country with good yield. And number 2, choose a reputable developer. So that property you saw is by 21st Century Homes. It's one of the biggest property developer in Philippines, focusing on mid to higher markets, to upmarket homes, condominiums. Of course, for Singaporeans, when you go invest in developing countries, you'll be looking at mid to higher level. So I chose Century Properties and he has a very good track record as well. So number 3, find a reliable agent to handle your properties. So I have contacts in Philippines and they are very reliable contacts. You need contacts. Definitely someone to look after your property when you are away, because you can't be traveling there all the time. So those of you who might consider Philippines as an alternative to Singapore, just feel free to PM me after this. I can share with you my contacts freely. Just take note that I don't earn any commission, but just to share with you. Risk of investing in overseas property. What are the risks of investing? Of course, with every investment, there's always a risk. There's an upside, there's a downside. So number 1 is currency exchange. You can see And number two, political stability. You have to consider in terms of political stability, look at the country. So for Philippines, it is generally quite stable in terms of the political situation. And for the next few years, there are actually, in fact, upcoming general elections around the corner for Philippines as well. But generally under the latest president, it has been quite stable and there's quite a bit of progress. Distance, talking about distance, because it's quite far, you need to travel. Philippines is considered within 2 to 3 hours. It's quite a short flight, not too far away. But of course, you have to consider distance when investing in overseas property as well, because you can't be traveling there all the time and you are not based over there. So there are risks in investing in Philippines property. So this is the chart, Singapore to PHP, a Filipino peso. So generally, you are exposed to the currency risk. Of course, it'll be a good time to buy when the Singapore currency is strong. The Philippines currency has been quite strong in recent years. In fact, it's been holding, it's pegged to the US dollars actually. So it has been doing quite well in terms of the currency. So you want to sell your property, like for me, if you want to sell my property, it's good if the Philippines property is, the peso is strong. But if you are buying, it's good to buy when the Singapore currency is strong. Advantages, why Philippines property? So I just mentioned to you, so that particular freehold condo, 35th floor, right smack in the Orchard Road of Manila, just walking distance to the downtown area. It's only 110,000, and for foreigners to invest, there is no restriction how many. In terms of Singapore, you can see that our Singapore government is trying to discourage us from having more than one property under our name. So 110,000, you probably can just get one parking lot in Singapore. Not even enough for you to buy a studio apartment, but it's enough for you to buy a freehold studio apartment in Philippines. So advantages, less taxes, of course, capital gains tax 6%, stamp duty 1.5%, property tax. You add all up, it's just about under 10%. Singapore, of course, compared to Singapore property, there's much more taxes that you have to pay. In fact, 21% even before you even see the property, you have to pay 21% upfront. Lower quantum, freehold studio for 110,000 Singapore dollars, because Singapore property higher quantum, much higher, and it's going up. Even in terms of COVID, people think that the prices will go down. In fact, it went up and up and up. Higher rental yield, 5 to 6%. It's compared to Singapore property, about half the rental yield, 3%, because we are taking advantage of the developed countries. And in terms of Manila, a lot of multinational companies are opening up their regional HQ over there. They are setting up offices over there. So you can see a lot of Filipinos, even from outside Manila, they will go in to find jobs in Manila, and of course they will rent, because they are from out of town, they will rent places. So in terms of rental yield, there's rental demand there as well. Greater capital appreciation, average 7.5% over the past 10 years. So Singapore property is a lower appreciation over the past 10 years, about 2%. Okay, so passive income, number 2. Passive income stream number 2 is dividends. Dividends, well, what do dividends mean? Well, dividends are in a layman's term, is the companies that you buy the stock of the company, and then they want to share out their profits, some of their profits. So the companies, they will distribute some of the profits to the shareholders, to retail shareholders. And sometimes they do it every quarterly, but most companies, they'll do it twice a year or once a year. So I've done my research for you, and this is the latest update in terms of Singapore companies, Singapore stocks. The top 3 dividend yield is Dairy Farm, the one that owns Cold Storage chain, 5%, 5.03%, Micro Mechanics, 4.23%, And Singapore Technologies, ST Engineering 4.01%. So these are the top 3 dividend payout in terms of local stocks. And if you want to look at dividend, we need to be able to understand how to calculate the dividend yield, because we need to be able to determine if this stock is a good buy. And you, of course, you have to do your research and look at the financial statements. You look through the financial statements, and then let me simplify it for you. What do you look out for? You look out for this thing called the dividend per share. So this example is a dairy farm. So dairy farm has paid out this in terms of US dollars. The figures you see here in terms of US dollars. It's 14.5 cents for 2021. That's the latest updated figure I got last year. So last year they paid out 14.5. So how do we calculate the dividend yield? Simply you take the share price, $2.86 dairy farm, divide by the dividend per share. So in terms of dairy farm, it's paying out about 5%. So of course, besides looking at the dividend yield, you're also looking at this, the top line, and see the year-on-year revenue. If you want to decide how to buy a stock which pays out good dividend, you also want to look at the company. It's doing well in terms of revenue, and what you want to see is the revenue increases year on year. But of course, you can see this one is slightly decreasing. Dairy farm, the second line, you can see the total revenue slightly decreasing. But generally for dairy farm, because it's selling groceries, so it's pretty recession proof. You can see Sheng Siong recently, in the past year, last year, they did quite well. Currently, the price has already gone up. Sheng Siong has already gone up. For those who bought at the middle, in the middle of 2020, when the pandemic hit, they will have earned quite a bit from Sheng Siong shares. And some of you may ask, Yan Tai, what about the recent US market correction? I personally invest quite a bit into the US stock market. So I can tell you that recently the S&P 500 is the 500 biggest companies in the US. So S&P 500 is an index. Index will track the 500 biggest companies. So you have names like Google, Facebook, Amazon. And you can see that recently it has tanked. But there's a very good saying, there's a very wise saying that in every crisis, there is an opportunity. So recent US market correction is actually an opportunity for those of us who are looking to get into the stock market. This gives us a good opportunity to get good companies on the cheap. So that is my take for it. If you have spare funds and you want to look into the stock market, now is a good time to look for the good companies. Let me just share with you 3 very useful strategies to help you save some time and minimize your risk, because I'm sure not every one of us like to look at numbers and look at all the charts, all the financial statements. So tonight I share with you 3 strategies starting with the letter D. Caleb, yes, diversification. Oh, Caleb, I missed that. Declining DPS for dairy farm, yes, Caleb, yeah, that is a very key factor that you want to look at as well, the DPS. Thank you for that. Dollar cost averaging. Second D is dollar cost averaging. And what's the final D? Final D, let me just give it to you. Let me just show you the S&P 500. And I'll review to you what are the 3D strategies. Thank you, Caleb, for sharing. You got 2 of the Ds correct. You can go to Starbucks tomorrow and you mention my name and you get free Starbucks. Just kidding, just kidding. Okay, so S&P 500, you can see these 500 S&P 500 biggest companies. If you are new into stock investing, let me just give you a cheat code. Let me just give you a hint, a valuable tip. Just invest in the index. So if you are looking to US market like me, S&P 500 is a very good one, good index. And if you are looking at Singapore stocks, a Straits Times index, you can also go into that. But generally, Straits Times index move quite slowly compared to the other index like S&P. and even the Hang Seng. So for Singapore, Straits Times Index, you have to be a bit more patient. So S&P 500, you can look at this over the past few decades. So this is the updated chart. You can see it's up, down, up, down, down. And generally, it's going up, and it's going up in an exponential curve. So you apply this 3D strategy. Number one, diversification across different sectors and countries. Duration over 10 years or more. So key to that is to give yourself time. You got to stay invested. You got to have skin inside the game. And give yourself time. Then you can see that over a long period of time, 10 years or more, you can definitely make returns. Don't try to time the market. A lot of retail investors, we try to time the market. We want to get in, we want to buy when it's low and sell when it's high. But very often when we try to time the market, we do it the opposite. Even the experts also cannot tell you whether the market's going up or down. So very simple, you just apply my 3D formula and you won't go wrong. Dollar cost average. Dollar cost average in layman's terms is you set aside every month, you set aside a certain amount, let's say $1,000, and you just go inside the market. 1,000 into market, 1,000 into market. Don't try to time the market. So dollar cost averaging is simply just to exercise this strategy, and it allows you to average out your costs. So you can see in this up and down, of course, there are some downturns. Of course, we have the SARS, and we have subprime mortgage crisis. They all have some dip, and recently 2020 we have seen the COVID. There's also a dip over there. Actually, the stock market has recovered, but just this year, the start of this year, it actually went down, and the Ukraine war actually caused it to dip once again. So you can see there's up and down, but generally it is a going upward trend. It's an upward slope. And the thing is, it goes up in the exponential curve. That's why you need to have patience and need to give yourself more time. Good news, I have a good news for you. Third passive income actually applies 3 of these strategies, 3D strategies. So the third passive income stream, let me just review it to you. It's called the actively managed portfolio. It's very boring. It's basically just put aside some money every month and just go into it, and you let the experts pick the stocks for you. It's very boring, but look at the returns. It is actually not too bad. Over the past, for this particular fund, over the past many years, it has given you 6.6%. And it's well diversified. So it consists of global equities, Asian bonds, Asian equities, Singapore equities as well, emerging markets, as well as a bit of China equity. So it's well diversified, and you'll be able to choose from various names, very big names like Schroders, BlackRock, A and B. So you can see over the past 1 year is 29.9%, but we look at long-term wise, it's 6.6%. So this is also part of my portfolio. Even though I invest in stock markets myself, I also have this as actively managed portfolio because it provides me with stable long-term returns. So it's a good mix of different strategies. So before I continue, I'll share with you 3 different passive income streams. Can you just share with me which one is your favorite? So number 1 is property. Just a quick recap: property rental. Number 1, you just type in number 1 if that's what you like. Number 2 is dividends, stock dividends, and number 3 is actively managed portfolio. Please share with me inside the chat box which one is your favorite, or you can choose more than one if you like more than one. For I personally have all 3. That's 1, 2, 3 is all my portfolio. Please share with me. Georgina 1 and 3, Monique 2 and 3. Share with me what is your favorite. Which one do you like the most? Which one suits you the most? Please have some responses. Please share with me. Don't be selfish. Please share with me. Share with me. Caleb 2 and 3. Okay, Caleb is a stock man. we can have a private chat. We can connect. You can share with me some of your investing strategies. I'll be happy to hear from you as well. Irvin 2 and 3 as well. Mark 2 and 3. Jeff number 3. Daniel 2 and 3. Thank you very much. Thank you very much. So this is my 3 passive income stream. I hope you like it. And it's my pleasure. In fact, it's my pleasure and honor to introduce the next speaker. But before I show his handsome face, I'll say that it's really a blessing. It's a blessing in my life to have been able to cross paths with this person. He's called the Abundance Life Coach. And his mission is on a mission to spread abundance to every one of us. So let's put our hands together and welcome Eugene Xia.
Thank you, Yuan Tai. Yeah, every time you introduce me, I feel like it's like a wrestling match. Yeah. Okay. And then Georgina asked about ETF, exchange traded funds. Exchange traded funds behaves very much like the actively managed portfolio that Yuan Tai say, except it's not actively, it's passively. Yeah. So ETF rides together with the market for those who are familiar. Right? When the market is up, it goes up. When the market is down, it goes down. So ETFs will never beat the market. Yeah. So if you want your money to go up and down according to market only, then of course buy ETF. ETF is fully liquid. By the way, I worked in Singapore Stock Exchange when I first graduated, and I worked there for 7 years. So my team was the one that launched the very first ETF, which is called the MSCI India ETF. Yeah, so I'm a huge believer of ETF. Yeah, but there is a very big problem that a lot of us didn't think about it before, because ETFs is so liquid. So a lot of my friends, right? Can you imagine? I'm 46. Yeah, so when we were in our 20s, we bought ETFs, and because it is so liquid, so a lot of us liquidated it, right? And we went for Europe holiday. So can our ETFs plan for retirement? You tell me, okay? The government purposely make your CPF life illiquid, right? Illiquid. You can't even touch your CPF life, CPF money, especially the special account, especially the MediSave also, unless you go to hospital, touch wood, right? Only your ordinary can use to pay for property, right? So they purposely make it illiquid so that when we are 65, we have some money. But ETF is so liquid until when we reach 65, I don't think you have any money, okay? But if you are very disciplined, every day you only eat vegetables, don't eat red meat, then maybe you are suitable to buy ETF and you have lots of money when you're 65. I happen to be around a lot of ill-disciplined people, they eat potato chip, grow fat, spend money on Starbucks. So for such people, I would say, please don't put all your money into very, very liquid funds like ETF. Okay, so that's my advice. REITs is also very good. Currently, REIT yield is not, it is stable, but it's not doing very well. I use a robo-advisor to buy REITs. I use Syfe, SYFE, to buy REITs. Okay. Erwin is going to share some robo-advisor later, so I will not spoil his fun. Yeah, but all of you can write down all this. You're writing notes, hopefully. Yuan Tai already shared 3 income streams, so you're supposed to be writing some homework, right? What are you supposed to do after this webinar so that you will do something with your money? And tonight is not a diploma course, that there's no exam where you take diploma, because if you choose not to get into all 6, or not ETF, not REITs, and none of the 6, then I'm sorry to tell you, we've wasted your time tonight. You're just entertained. It's like, wow, Yuan Tai is so funny. He wears sunglasses. Wow, pretend to do Viking. What's the point? This is not Netflix, Yeah, so all of us, please, while listening to Yuan Tai, me, and Erwin, think, how am I not using my money right now to optimize it, right? Everything due to fear is all trapped in your fixed deposit and in your DBS bank. This is called fear. This is not called logic. This is called fear. And some of you, due to greed, wow, say, don't want this kind of actively managed fund. Only 17%. I can buy Bitcoin, can go up to 300 times. Or NFT, wow, can go up to 500 times. Right? For such people, I'm sorry. Yeah, not the same kind of risk profile as us. Okay, if you like to gamble, then go ahead. Okay, it's your money, not our money. Okay, so now I'm going to share with you 2 income streams. Okay, Yuan Tai shared 3, I've shared 2, Erwin shared 1. That's how we make up 6. So both income streams are related to super low risk. So as you can see, Yuan Tai's methods are, although low risk, right? Because like Philippine property, lower risk than let's say buying Indian property lah, or lower risk than buying, let's say, American property, right? Yeah, but it's still considered relatively high risk because of the distance. You're not physically there in Philippines to manage. But he's very lucky. He has a very good friend who is situated in Philippines. So if you all are really interested, please go and ask him. And then please get to know the good friend first before you put your money there. And then some of you like the actively managed portfolio. By the way, my own money is also there, but it has its risk because nothing is guaranteed, right? The actively managed portfolio is just a whole portfolio of unit trusts like Schroders, BlackRock, Aberdeen, a few very top tier kind of funds put together, but none of them is guaranteed. Yeah, but as what Yuan Tai told you, if you're willing to go through the distance, right, the duration of about 10 years, if you're willing to do very disciplined approach, like, wow, every month put in instead of just one lump sum and never put in again, and if you're willing to diversify across different sectors, then I think relatively you're safe, right? Yeah, but I'm so low risk that I decided I'm going to put money into other things that have guaranteed value, okay? Guaranteed value. So if you're like me and you like some guarantee, then please pay attention to this, okay? So why is Eugene Xia so hard and fast about guarantee? Yeah, because I lost my job before. In 2013, November, I lost my job. I used to earn $24,000 per month in my banking job. And can you imagine? The fixed salary, every month they just throw money at you, even though you're checking Facebook, even though you go on annual leave, they're still throwing money at you. And then I just lost it with a snap of a finger. Then I suddenly realized that, why am I so stupid? A lot of things in life are not guaranteed, right? My job is not guaranteed. And then my unit trust, not guaranteed. Bitcoin, not guaranteed. So at the age of 38, when I lost my job, I decided, okay, from today onwards, I'm going to go into a lot more guaranteed income streams. And because of my change of philosophy, I was invited by Money FM. Just now, Yuan Tai was invited by Sunday Times. I invited by Money FM. Not bad also lah. Not bad also. Okay. Yeah. And then for the past 5 years, I've been hitting $1 Million Round Table, which is meaningless to most of you since you're not in our trade. But basically, it represents the top 5% of financial advisors in the world, not in Singapore, in the world. Okay. So I share all this with you, not to hao-lian, not to boast, but to tell you whatever I say tonight works, okay? If it doesn't work, I will have lost my license long ago. So this is called the income pillar, income pillar. So the first question I ask you is, how much passive income do you want per month when you retire? Okay, so let's not count in inflation because it's very complicated. Just pretend you retire this year. Can you retire this year? And how much money do you want for this year, 2022? Okay, go into the Zoom chat and just type the number right now. In case you don't know what number to type, just look at your monthly expenses, like how much do you spend per month on your drinks, on your Singtel bill. Some of you are paying mortgage, some of you are paying rental, some of you even have regular medicine to eat. Some of you have to give allowance to people around you, either your parents or your children, right? And then next time when you're much older, of course, you don't have to give to your parents that your parents will be like, in heaven already lah. And then your children will be financially capable, so you don't have to give them allowance, but you might still want to give to charity, right? I mean, a lot of retired folks, they like to give to charity. It is very fulfilling. So please remember such things, right? Don't so lean and mean until you only plan for your own three plates of cai peng, right? And then when the charity come to you, you say, sorry, not enough money. A bit pathetic lah, okay? Forgive this word, but can you imagine you work for 30 years of your life and not enough money to give charity? To me, it's a bit pathetic, okay? Hey, I'm still waiting for most of your answer. We have 26 participants tonight. So far, 3 of you replied. You don't show video, it's fine, but at least participate, can, right? It's only respectful to join someone's webinar, especially it's a free webinar. If all of you paid $10,000 tonight for the webinar, then you don't need to interact anymore. Yeah, but this is a free webinar, so the very least you can do is interact, can? Yeah, I hope you don't mind my blunt language. Huh? Okay, so Junie 3K, Mark 8K. By the way, there's no right or wrong number. There's only sufficient and insufficient number. Right? Erwin just now shared with you that a lot of people don't even know how much they should have upon retirement. Like for example, Helen, I know you probably don't spend a lot, but let me just tell you what 2K can get you in Singapore, okay? So about 4 years ago, NUS did a study across Singapore, and they found out that people, right, if they just eat the normal 3 meals without going to Din Tai Fung or Chongqing hot pot, right? And then if they just pay the normal Singtel bill, like don't go for the maximum like unlimited data. If they just pay normal rental, right? Not super poverty rental like $30 per month, but not like luxurious rental like $10,000 per month. No, normal rental, normal mortgage. And you know that elderly also need to pay. Some of us have the mistaken impression that when you're old, no need to pay for property anymore, right? If you don't plan well, I guarantee you have to pay. I do a lot of volunteer job to visit the elderly, and a lot of them are still paying rental, right? Then they start to tell sob story like their son stole their property, changed the deed, this and that, or the uncle did this to them, auntie did that to them, or their ex-wife. I tell you, human life is full of uncertainty, right? Don't be so sure your property is still with you. I'm not so sure. I don't know how come you're so sure unless you're God. Okay, so remember all these numbers. Please write it down somewhere. Don't just put in a Zoom chat. Write it down on your paper, tattoo it on your forehead, so that throughout your life, you'll be building up your passive income stream to reach that level. Like for example, Jia Yi wants 5K at today's value. And if Jia Yi retires about 20 to 25 years later, then Jia Yi, can you tell me a very simple thing? Including inflation, how much money would you need per month when you retire? Assuming you retire 20 to 25 years later. Okay, can you key in a number? I'm using Jia Yi as a case study. She said she wants 5K at today's value. So about 20 to 25 years later, how much money does she need per month passively in order to retire comfortably in a real dollar value of 5K per month in today's value? Okay, how much is it? Is it 8K, 9K, 10K, 12K? Everybody please chip in. Yeah, calculate. Take out your financial financial calculator, right? Take out anything you like. Take out your abacus, take out your sundial, take out anything. Okay, please. And I'm very sure Caleb knows the answer. Caleb seems to be quite savvy in finance. Okay, everybody, please try to win Caleb. Don't let Caleb win. Go into the Zoom chat and type. If today, 2022, you need 5K per month, then in 20 to 25 years time, how much money do you need per month? Quick, type your calculator or go to some app, free app, and say, oh, inflation, count in. Yeah, I'm very sure out of 25 people, at least 1 or 2 know. Okay, I'll wait for you to answer before I move on. No, per month, Georgina. Not how much money in total per month. Cannot be 1 million per month. Then everybody commits suicide already. It was so sad, you know. Who's going to earn $1 million per month passively? Bill Gates. Okay, sorry. Yeah, okay, Bill Gates. Elon Musk. Okay, Elon Musk. Hey, lower the number. Hey, the inflation, by the way, is 3.2%. In case you don't know what to type in your financial calculator. Inflation is 3.2% per year. And this is considered quite high. Usually it's about 2 to 3% per year. Really that difficult, man, this question? Very good, Jia Yi. 满分. Okay. Like what Yuan Tai say, tomorrow go to Starbucks and use Yuan Tai's name. But if they say, I don't know who Yuan Tai, quickly run away. Okay. So it is about 12K. It's actually very easy. No need to use financial calculator. Okay. Every 20 to 25 years, you need double. I repeat, every 20 to 25 years, you need to double. Okay. Very simple. Then if it's not 20 years, then you just proportionally decrease. Yeah. So a lot of people think that you need 5K per month now. Then you also need 5K per month when you retire. That means you don't understand inflation. Okay, so please calculate very, very properly. I'm going to give you a gift, not just me, Yuan Tai, me, and Erwin. We're going to give you a gift. Very, very simple. You key in the monthly amount you want. Okay, you like for example, Jia Yi put in 5K, not 12K. Put in 5K into this survey form, and then Jeff, not Jeff, who wanted to put 3K, yeah, and then some of you put 2K. So no need to count in inflation. We will count in inflation for you. So in order to count in inflation for you, you need to put your age also. Okay, so very simple. Only 2 things we require from you. Just your age, current age. Please don't pretend your age. This is not Tinder. Not Tinder. If you're 35, just put 35. Don't pretend you're 18. Yeah, so put your real age as of 2022, and then put the amount of money you want as of this year. Then we will help you calculate the inflation. And we will help you calculate how much do you actually need to save per month to reach that level of living and lifestyle that you want. Okay, and obviously no obligation. Yeah, sometimes I need to explain because a lot of people got burnt by previous financial advisor, then start to hard sell them things. We are educational one. Okay, we've been running this webinar twice a month with an attendance of 20 to 30 all the time. And a lot of people gave us very, very positive testimonial because they really like it. Okay, so no hard sell here at all. We're going to give you the number. And if you like to continue chatting with us, we continue chatting with you. If you don't like, that's it. We just give you the number and you just stop there. Okay, so quickly type your age and the magic number and just type done, DONE, so that I can continue explaining passive income stream 4 and passive income stream 5. Okay, Monique is done. Anybody else done? There are only 2 questions. It shouldn't take you more than 1 minute to fill in this very simple survey form. Okay, I'm going to wait for 30 more seconds. Just be faster with your finger. Faster with your finger. If you are using a phone, scan the QR code. If you are using computer, click on the link. Okay, another 20 seconds to go. Once you are done with the age and the number of what passive income that you want, just type done, DONE. Yeah, I think by now you're sort of got used to me. Yeah, I rarely move on unless I get what I want. Okay, yeah, journey is done. Okay, very good, very good. This reminds me, last time I was in NTU, NTU, and then the lecturer always talks to himself. Right, say, guys, anyone know the answer? Anyone knows the answer? And then nobody answer. He say, never mind, I tell you the answer. So very, very soon, right, nobody even bothers to answer his question anymore. Yeah, so I decided when I became a trainer and a coach, I'm not going to make the same mistake. Okay, so when I say I want an answer, I wait for an answer. And let me drink water. Daniel, Caleb, very good. Joni, very good. Jess, very good. 10, 9, 8, 7, 6. Victor, very good. 5, 4, 3, 2, 1. Okay. Whoever key in the number, I promise you very good stuff now. Because right now, you're going to learn how to turn your active income from your business or from your salary into passive income very easily. Please write down the word easily. Easily. Okay, this is not difficult at all, not as difficult as what calculating dividend yield lah. Wow, I have to check the Philippine law lah, and then I have to check like, wow, is it Schroeder or BlackRock lah? Who are they lah? What's the ratio lah? Should we 30% BlackRock or 20% BlackRock? Okay, this one is super, super easy. Right, all you need to do is get this vending machine, metaphorical, not a real one, and then put in every month, okay, into this vending machine, and then when you retire, this vending machine will give you a lot more than what you put in. Very simple. Okay. The first one I'm going to introduce you is called CPF Life. Okay. I tell you, I'm very grateful to be in Singapore. I don't know about you. I know a lot of people complain about government. They have their own problem, correct? But I think the CPF Life is done very, very well. Okay. I'm very proud of it. Hey, who here is also quite grateful for CPF Life? Can you put the word me? Monique is very grateful. Anybody else put the word me? Me. Okay, very good, very good. Wow, we are on the same page here. Hey, so few people. Okay. Oh, it's good to be grateful. This is called the law of attraction, right? Because when you tell the universe you're grateful, then the universe gives you a lot more things. Okay, some of us believe in Buddha, some in Jesus and all that. That's why I use universe as a generic phrase. The second thing that behaves like CPF Life, okay, but not CPF Life, starts with the letter A. Anybody wants to guess? It behaves like CPF Life. You put in every month, and then when you retire, you take out every month. Yeah. Monique, wow, Jackson, very good, very good. Okay, it's called annuity. So some of us, I know, don't really know how annuity works, but don't worry, don't worry. Okay, we'll go in step by step. Okay, the first thing you need to know is at the current level, I need to update this chart. Okay, the current level is 288,000, okay, the current level. And then by the time you retire, okay, you will get around $2,300 to $2,500 per month. Okay, obviously not enough money. Okay, obviously not enough money. So that's why we need to plan for private things like dividends, property, and also annuity. Okay, so please don't think that CPF Life is going to take care of you for life. Not for life, sufficiently. Okay, so please remember to plan other things as well. Okay, so now let me teach you how to save tax first before I move on to the next topic. Okay, so very, very important, okay, that you must at least Okay, please top up your CPF. Very, very simple. Okay. How to top up your CPF? You can put in, don't talk about SRS first, talk about CPF first. So you can put in $8,000 per year, not per month, per year. Okay, maximum. Okay, then they will reduce your income proportionally to the taxable income. That means your taxable income is $8,000 less than what you really truly earn. And then you can also top up for your loved ones. Loved ones meaning your spouse, your parents, and even your children if you want to. So if you are flush with cash, then you just go around like doing this. Wow, everybody, 8,000 for you, 8,000 for you, 8,000 for you. Okay, then you put into their CPF account and the tax will be reduced accordingly. Okay, so this is very good. The only downside is you can only take it out when you're 65 and not everything. You can only take out monthly when you are 65. Okay, so that is the only downside, but the upside is a guaranteed return of 4% for your retirement account. 4%. Okay, very, very good. Okay, let's continue. The second thing is what Monique says, SRS. Well, maybe she secretly represents government one. That's why she knows. Okay, supplementary retirement scheme, which is not not CPF. Please. A lot of people think, oh, SRS is a fourth account. You know, you have OA, SA, Medisave, and SRS. No. SRS is another thing altogether. It's also from the government, but nothing to do with your CPF. Can anyone tell me which are the 3 banks that can allow you to open SRS account? Quick, quiz question. Go. Quiz question. What are the 3 banks? Wow, Monique. Wow, you like type already, ready to press enter. How can be so fast one? Yeah, correct. Hey, Monique not in my team, in case you all think I rehearsed beforehand. Okay, so it is the 3 local banks. Okay, one more question. How many percent does SRS earn you? And Monique is not allowed to answer. Let other people have a chance. Okay, how many percent does SRS earn you? Just like I told you, ordinary earn you 2.5%, right? Special account earn you 4%, right? Medisave also earn you 4%, right? So how much percent does SRS earn you? Caleb Low says 0.05. Anybody also believe him? Mark, okay, who believes Caleb and Mark? Or you think of another number? Calling once, calling twice. Well, I can sense that everybody just look up to Monique, Caleb, and Mark. I need to make them into a counselor of the Abundance Club. Yes, it is 0. Paul, cannot be 5%. Wow, even higher than special account. Impossible. Okay, 0.05%, which is the OCBC, UOB, and DBS normal savings bank rate. Okay, so why in the whole wide world would people put in SRS, right? Because tax savings. Tax saving. So assuming you earn 72K per year. Sorry, I talk very dramatic one. That's the natural me. I'm not acting, you know. I normally talk like that one. Okay, so if you earn 72K per year, then if you if you put the maximum amount of $15,300 into SRS, then congratulations, you can save tax of $1,071. What do you say? Huh? Che, only $1,071. Waste my time lah. By the way, if you think $1,000+ of tax saving is very little only, I'm going to give you my bank account number. Okay, just transfer 1071 to me. My children will be very grateful to you. I can upgrade their university. Okay, all thanks to you. So please, every dollar counts. Please save the tax. Can $15,300 is only 1,275 per month. Okay, I'm sure if you have worked for the past 20-30 years, you should be able to have cash flow of at least $1,500, $2,000 per month. If you don't have, then you shouldn't be listening to us talk about passive income. Okay, you should be talking to the town council, to your MP, to learn how to spend less. Okay, so let's assume you can afford it. Please remember your SRS account. And obviously, right? Obviously, your SRS cannot live there. You can use SRS to buy stocks. Okay, it's just that you cannot use to buy property. Cannot. Okay, you can use SRS to buy robo-advisor also. Okay, later Erwin will talk to you about robo-advisor. And you can use SRS to buy something called annuity also, right? Okay, so by the way, let me quickly, on behalf of the government, tell you that your SRS, you're supposed to take out between 63 and 73, okay? You cannot from 63 for lifetime, cannot. You need to take out within 10 years. The government forces you to take out within 10 years. And for every single year that you take out from SRS, half of what you take out is taxable. Understand? Okay. Yesterday, you can pretend to be ignorant. Today, after this webinar, you must remember this. And because half is taxable, then please remember to take out less than $40,000 per year, okay? Because $20,000 is not taxed and $40,000, half of it is taxed. That means in the end, you take out $40,000, you don't have to pay tax. Okay, please remember this. And if you don't like to take out between 63 to 73, right? Then very simple, there's a simple hack, H-A-C-K, hack. Just simply use SRS to buy life annuities. And then you can buy 15-year annuity, 20 years annuity, 25-year annuity. Then you don't have to force yourself to take out within the 10-year withdrawal period. Okay, you can thank me later. This is a simple hack. And by the way, I enlarged the font size here, but it's actually a footnote on the government website. You know? So I have to like enlarge it for you to see. Okay, this is a hack that all of you must remember. Okay, and this brings me to annuities. Okay, so annuities are based on something called a PAR fund. I know all of you here have some kind of financial planner. I suggest you go and ask your financial planner, hey, excuse me, can you explain what is PAR fund? I guarantee to you, half of them don't know what's PAR fund. Do you know there are about 12,000 financial planners in Singapore? And most of them are very new. That means they just passed their license, that 1-2 years in the market, and then they just keep selling you things like unit trust, investment link plan, life insurance. But when you ask them technical question, they don't really know. Okay, so let me explain to you what's PAR fund. PAR fund is called the participating fund. Okay, need to show previous slide. Okay, yeah, please feel free to take a screenshot. I won't charge you any royalty for this. Okay, calling once, calling twice, 3 times. Okay, next slide. Okay, so remember, PAR fund is the insurance company's own fund. Okay, you see the whole list of insurance companies here: AIA, Aviva, AXA. I circle Prudential because Yuan Tai, me, and Erwin are from Prudential. Okay, yeah, but we're not introducing Prudential products tonight. Okay, we're talking about concepts. So remember, PAR funds are basically the insurance company's own money. Imagine every month they collect from you insurance premium, right? Some of you pay $500, $1,000 per month. Then where does the money go to? It cannot be every money go to the CEO pocket, right? That one will be called corruption. Yeah, so they put it into their bank account. And then it's a crime if they let the billions of dollars in their bank account grow at 0.05%. Siao. This is an insurance company. They need to do something with it. Do you know OCBC, UOB, and DBS? They lend out your money. You know. Can you imagine they give you 0.05% return? But when they lend people to buy car, lend people to run businesses, they charge 2%, 3%, you know. So this is called the margin, correct? Now, 3% minus 0.05, the rest is their profit. So that's how banks earn money, by lending. But insurance companies cannot lend. They don't have a lending license. So the only way they can grow their money is put into something called the PAR fund. So by right, the PAR fund, they don't even care about you. It's their own money. And they have been growing at 4.42. Is it the worst company here? HSBC Insurance, 4.42% average for the past 10 years. Okay, and then good companies like AIA, 6.21. Prudential is the second highest, 5.84. Can you imagine? But the range is roughly similar, right? 4 point something to 6 point something. It's a very, very narrow range of returns because most of it is in bonds. Those of you who know what's bonds are completely opposite behavior of stocks. Okay, stocks and bonds always have to be in the portfolio because they help to net off the effect of each other. Okay, so for those who are very, very high risk one, they will probably only have 5% bonds. Like just now, Yuan Tai showed you the actively managed fund, right? That one only 5% bonds. For those who are very risk averse one, like Prudential, they are very risk averse. So they put 60% in bonds. Okay, so in other words, all these numbers you see are very safe numbers. They are not inflated, exaggerated numbers due to the bull run. They are very safe numbers for the past 10 years. So when we buy an annuity, we are essentially riding on PAR fund, okay? So companies like AIA, Prudential will take out a little bit of margin. They need to eat, right? It's like bubble tea ingredient costs $2, but they sell you for $4.50. So they need to eat, right? So they take out a bit of margin of about 0.9 to 1.1%. Then the rest of it is your return. What does this mean? That means if you happen to get something from Prudential, you know that the PAR fund is 5.84% for the past 10 years. then you just have to minus 0.9 to 1.1%. That will be your yield. Y-I-E-L-D, your yield. Okay. Sorry, I'm throwing out so many numbers. Yeah, but if you don't understand this, then you think, oh, it's a scam, too good to be true. But once you understand this, then you realize you're missing out a lot by not buying annuity. And you know why most insurance planners don't like to talk to you about annuity? They prefer to talk to you about unit trust, investment link plan. You make a guess, come. Let's keep it interactive. Make a guess why most insurance advisor don't like to talk to you about annuity. They prefer to talk to you about investment link plans. What's the reason? By the way, do not ever go and buy investment link plans. Okay, do not ever combine investment with insurance. It is the wrong thing to do. You will get neither. Yes, because higher commission. Because easier to explain. Thank you, Jeff. Yeah, because investment, everybody know, no need to explain so much. Pafan, simi lai ye. Wow, then you explain so much and the saliva all come out. Okay, so please remember, don't buy investment link plan. You must buy annuity, okay? Because then you can have a guaranteed value. You can max out your returns. Okay, now let's talk about SRS annuity. Remember what I told you? If you use a SRS to buy annuity, then you can choose a 20-year withdrawal period, 25 withdrawal period, and so on. You don't have to be trapped by the 10-year withdrawal period. By the way, you know what's wrong with 10 years, right? You just get retired 63, then by 73, you finish already, finish. Then 74, no need to eat. Only depend on your CPF life. So it's very important to extend the period of payout. Okay, very important. So imagine I put in $30,600. Okay, that is 2 years of SRS. Then it is my money. By the way, I'm not showing you a product. I'm showing you how I use my SRS. And then based on assumption, this is assumption, 4% per annum return. The actual is 5.61 to 5.82, but right now the assumption is a lot less. Okay, 4%. Then do you see? I will get roughly how much? Let me see. Yeah, I will basically more than double. I'll grow my money to 2.5 times. Okay, so not bad, not bad. Not as good as Bitcoin in its heydays, but it's not bad for a guaranteed product. Okay, and then if you choose to reinvest, that means every month they give you, you don't want to take, you say, hey, reinvest, then you will get a lot more. Okay, close to 3 times of what I put into SRS. Okay, this is not product introduction, so I'm not going to spend too much time. I just want to show you that it's very easy to earn money from the money you put into SRS without you calculating dividend yield and then all the difficult ratio and then checking newspaper to see whether there's war or not. You just have to sign an annuity, close your eyes for the next 20 years, and then wait for your money to come in. Okay, I'm very lazy, as you can see. And then let's quickly move on. Okay, so altogether, not you, this is based on me, okay, because I don't know your age and I don't know how much money you want. So Eugene Xia is going to get 45K to 54K of passive interest gain. Okay, not bad for not spending time on it at all. Now let's assume that you are working or running a business and then you keep putting money every month. So my suggestion, okay, no, sorry, I cannot say suggestion, later I get charged. Okay, I suggested to myself to put in $1,200 per month. Okay, so I'm not shy to tell you my cash flow. You know cash flow, right? Cash flow means your income minus your expenses. I repeat, cash flow means your income. Let's say you earn $10,000 per month minus your expenses. Let's say you spend $5,000 per month. Then your cash flow is $5,000 per month. Okay, understand? So with the cash flow, you're supposed to diversify like what Yuan Tai said, right? So for me, let's say I have $5,000 of cash flow. Then I put in $1,200 into annuity, right? Then I remember what I put for SRS, $1,275 into SRS, right? And I also buy some stocks, and I told you I also bought some Bitcoins and Ethereum. So you're supposed to diversify your cash flow. And who thinks this makes sense? Can you please put the letter D right now? D. That means you think what I say makes sense. If you have a $5,000 cash flow, you're not supposed to put all $5,000 into stocks, no matter how much insider information you get, right? Because some insider information is rumor, not real one, right? No matter how much you love annuity, you're not supposed to put in $5,000 per month also. Hello, what are you doing? Right? You're supposed to diversify. And some of you run business like Jeff Louis runs his own gym and all that. Please put aside a little bit for marketing, okay? Marketing is investment. Those who run business say correct or not? Please put correct if you think you should put some money into investment like Facebook ad and all that, and that is going to compound your business as well. By the way, who runs a business here? Can you at least put the letter B? Yeah, I'm just a bit kepo lah, nothing to do with this topic, but I just want to know who runs a business here. Put the letter B. I know Jeff Louis runs a business. Anybody else? Maybe only Jeff Louis. Oh, really? Only one person runs a business. Okay, it's fine. It's fine. So the rest of you, I assume, are employees. Okay, so 1212, then they will give me 1480. Okay, so this is guaranteed monthly income. I told you I want guaranteed, right? So the 1212 is guaranteed to give me 1480 per month when I retire. On top of guaranteed, there's also variable bonus, which is around $200+ per month. Okay, and you see this special annuity, right? This is a very unique annuity. Every year without fail, okay, it will grow by 3%. That means it will beat inflation. At the very least, it will match inflation. So this is a very unique annuity that I got last year. I'm 46 this year, so I got this last year, so I was 45. So altogether, I put in $218,000, and altogether, I would have gotten $479,000. Most likely more, okay? It won't be this, like this is like a base amount because this is assuming 4% per annum return, but I already know it's 5.61 to 5.82, right? So I know for sure 479K is a base amount, not a maximum amount. And that will give me, wow. How I wish we are all in the same room. I'll ask all of you to say wow together. Wow. Okay, 260K of passive interest gain. Okay, depending on your risk appetite, some of you will really find this very helpful. Some of you will say, hey, I thought 2 million, only 260K. If you are too greedy, I can't help you, seriously. Okay, right now, I'm going to talk to people who want the annuity to pay you before 65. Okay, please feel free to take a picture of this. But always remember, you are taking a picture of my annuity. Okay, this is not your annuity. I need to generate numbers based on your age. So I can actually withdraw money before 65. Not like CPF Life, right? CPF Life force you to take money only upon 65. But this one, you can take out even at 55, even at 50. Okay, amazing. But you must know how to do it lah. Okay, today no chance to tell you too technical already, but just remember you can do it. You can do it. And the second thing you can do with annuities is you can actually pass it on to your next generation. Who here is a parent? Can you please put the letter P? Parent. Those with children is called parent, just to define it. And if you don't know you have children, like in Vietnam or Batam, no need to put anything, okay? This is only for people who know that you're a parent. Okay, Monique is a parent, Georgina is a parent, a few of you are. Okay, quite a lot of parents tonight. So please don't be selfish. I'm not asking you to make your children millionaire, okay? In fact, don't do that. If not, your children don't work and then become very lazy, take drugs all the time. But leave a bit of money for them. Can you imagine by the time your children start to work? Can you imagine? HDB costs 1 million plus. I don't know what's wrong in Singapore. HDB, not condo, costs 1 million plus. How are they going to afford it? So please, as parents, please help them out a little bit. Okay, give them a slight financial advantage by leaving them your unused annuity. Correct or not? Okay, and the annuity will continue to grow at 4 to 5% per annum. Because if you pass them cash, let's say you pass them 200K, they also don't know what to do with it, right? You think your children will be so savvy, can buy stocks and then calculate dividend. Right, later they use it to spend on what? Nintendo, PlayStation. What wasted, So remember, okay, this optional benefit too. I don't want to spend too long here. This is my favorite topic. Everybody, please sit up straight. Take a deep breath. This is a newly launched annuity called the leveraged annuity. Okay, this behaves exactly like property investment. A lot of people like to buy condo, right? Yeah, so instead of buy condo, go and buy leveraged annuity. It behaves like condo, but guess what? No tax to pay. Just now, Yuan Tai told you, right? Why did he go for Philippines? Because the tax is a lot lower, but not zero. And then why didn't he invest in Singapore property? Because of the stupid, sky high taxes. But if you buy this pseudo condo called the leverage annuity, then there's no tax at all. You know, every month when you collect rental from the tenant, right, you have to pay tax for that. It's called income tax, you know. But for this one, every month you also collect rental, but zero tax. And then the condo rental yield, by the way, is only about 3%. Some of you thought like, wow, I'm going to be a millionaire when I buy a condo. It's only 3%. This one is 7 to 9%. Okay, a lot higher than condo yield. And condo, the value is not guaranteed one. I know in Singapore, more or less it will rise, but it's not guaranteed. Okay, but this leverage annuity is guaranteed. And then how much rental yield do you get? It depends on how much money you put down. Exactly like down payment, right? If you have $500,000 of down payment, wow, you can buy a few $1 million of condo. But if you only put in about 100 plus 200,000 of down payment, then you can only get a 1.5 to $2 million condo, correct? Yeah, so for this one, okay, if you put in, please write down the number. If you put in 67,000, okay, not 100,000, not 200,000. If you put in $67,000, you will get roughly $525 per month of rental income. Not bad lah. So if you want 1,000 plus, just double it lah. So become 113 something lah. Oh, so 67 times 2. And then most importantly, for those who are parents, when we pass on, just like if you buy a condo, when you pass on, the condo belongs to your children, right? Yeah. So when you pass on, this annuity will have a lump sum. It's like force sell the condo and then pass the cash to your kids. Okay. So I tell you, I cannot overemphasize how good this is. I'm very glad I'm born in this era that I get to see this happen. Okay, it's like iPhone. Can you imagine the days before iPhone? Cannot even check internet when you are out there in the MRT, right? So this is one of the greatest invention in the retirement world. Okay, but there's one problem. There's one problem. Yeah, you need to have at least $100,000 of annual income to be allowed to buy this. Okay, so this is not for those who are young, like 12 years old. I confirm shouldn't have 100K annual income. Maybe not. Hey, you look like a YouTuber. I know YouTubers earn about a few $1 million per video. Yeah, and then you need to have a minimum 67K of savings. I think most of you should have the minimum savings, but do you have the 100K annual income? I don't know. Okay, so if you happen to match this criteria, then right now, I want you to PM. Don't announce to the whole world, I got more than 100K. This is not a time to boast. Okay, I want you to private message me. Use the private message function and type 67. Okay, and then I will share with you a lot more details, how this works, what are the benefits, what's the timeline, what are the potential risks. But I don't want to go into too much detail now because I'm guessing that maybe a percentage of you don't have 100K per year salary. Okay, it's okay not to have 100K. I'm just saying you cannot get this plan. Okay, I'm going to count down 10 seconds. Quickly, I see a few of you type 67 to me already. Right, just private message me, very simple. Then later I will respond to you in terms of how much is it, and then how long is the timeline, what are the risks. Okay, but only for those who type 67. I received 3 already. Any more? 5 more seconds to go. Okay, 4 already. It got 25 people here. I don't believe only 4 of you earn more than 100K per year. Right, okay. Very good, very good. 3, 2, 1. Don't worry, later I give you another chance. Okay, for those of you who already typed 67, very good. Okay, you know the value of this. Right now, I want to tell you about liquidity. Just now I said earlier, let me just repeat. Liquidity, right, is a double-edged sword. Without liquidity, then tomorrow you can't even buy your cai peng, correct? You need some liquidity. But if all your money is liquid, this in Chinese we call 伤脑筋, right? This one. If all your money is liquid, that means all your money is growing at only 0.05 to 1%, correct or not? Or if all your money is liquid, means all your money is in stocks, because stocks are liquid, which means all your money is subjected to the risk of volatility. So if I'm you, right, I will divide all my money into 3 buckets at least. Okay, please write them down, 3 buckets. The first bucket is called the fully liquid bucket, fully liquid. That means in your bank account or into robo-advisor, which Owe will tell you about. Okay, fully liquid. The second bucket is called the semi-liquid. That means things like Bitcoin, things like stocks. Why is it semi-liquid? Because when it's underwater, you wouldn't sell, right? That's why you cannot say it's fully liquid. right? You buy China stocks at the wrong time, wow, it crashed just like a few months ago, then now you are underwater, you're stuck. So even though you can actually withdraw, but you don't want to withdraw. Okay, so this is called semi-liquid. Okay, the third part is called very illiquid. Very illiquid. Like CPF Life is very illiquid. Annuity is very illiquid. Like for example, just now I said 67K, right? You put inside, then you will never see your 67K again, right? Because 67K was used to buy a condo, ma. So you see a condo instead of 67K. You understand or not? Yeah, but every month you collect rental, lah. So you will see the rental, but you won't see the 67K. So this third part is called the illiquid. Hey, who thinks this 3 bucket makes sense? Please put the number 3. Okay, I just want to see who resonates with my message. That you should put your money into 3 buckets. Okay, you shouldn't put all into liquid funds because you are depreciating. You shouldn't put all into CPF Life because then you have no money to eat tomorrow. And you shouldn't put all into stocks because then every night you cannot sleep. Right? You have to check like, hey, what is Biden saying today? And what is Russia doing today? Right? I want to enjoy peace and peaceful sleep. That's why I put into 3 buckets. Okay, let me continue. So these are all the numbers. These are my numbers. My numbers, not your numbers. I'm very worried. You know, some people like charge me to MES, say, these people give me wrong number. Who say wrong? This is my number. Okay. So I will have passive income of 4,600 plus per month when I turn 65. Okay, this is my number. And then obviously I also did property investment. I also did dividend. I also did passive, actively managed portfolio. So altogether right now, okay, in 2022 March, I've already structured passive income of $9,000 per month. Okay, I'm still growing my business. So in the next 10 years, and I'm still very young, by the way, I told you I'm 26, right? Yeah. So in the next 10 years, I'm going to grow my business so that my business will also pay me passive income. Okay, so 9K is a starting point for me. So please, it's not that difficult, right? Please start doing something from today. Okay, there's one more chance to show to key in the QR code in case you haven't. Right, just now I gave you one chance to key in QR code. If you didn't do it, this is your second chance. I'm going to give you 5 seconds and quickly move on to Erwin. Okay, 5, 4, 3, 2, 1. You can also click on this link. Okay, I promise you, you won't regret it. We've been running this webinar for 18 months, and a lot of people say, how come my financial planner never even calculates such simple numbers for me? Right? So we're not even your financial planner, but we're going to do it for them. Right? We'll just give you generously. That's why we're called Abundance Club. Right? After you get the number, you can even go back to your financial planner and say, hey, wake up your bloody idea. This random stranger give me very proper number. How come you never give me random number? Okay, so please. Sorry, I'm not supposed to score other financial planner. Okay, so Erwin is a very young guy. Right? He lives in a large family, and he told me that he wants to give his parents a very good life, which is why he is sharing the third topic for today, how to use the normal liquid funds to grow even faster. Erwin, over to you.
Thank you very much, Eugene. Okay, so now we'll be covering the final pillar of the abundant retirement plans, and the last I is on interest. Oops. On interest. Okay, so I'm the eldest son in my family, and I want, as what Eugene said, I want to give my parents the best life possible. And I also want to be a very good role model for my parents. For my siblings, not my parents. So what I'm currently very sensitive to where I put my money, because having liquid money is very important where I leave them, right? Do I leave them in the bank? Or is there any other instrument that I can put my money in? So today we're going to share to you 2 liquid instruments that you can use to keep your liquid money. So before we go there, can I just have a quick quiz for everybody over here? Which liquid instrument over here do you think has the highest interest rate over here? SafeCash, Squirrel Safe, or Bank of China? Can you put A, B, or C in the chat, please? We got Monique with B, Squirrel Safe, Mark with Safe, Caleb Safe, Georgina, Jeff, and Jess, or Safe. Okay, very, very good. Okay, so this information was up to date up to a few months ago. Recently, Squirrel Safe caught up. So I'm going to show you in a while what are the rates, okay? But before that, we're going to talk a little bit about banks. So banks in general, 0.05% of interest, right? But there are banks that give above the 0.05%. And two of the examples that we have over here is actually Bank of China, they actually gives you up to 3% of interest on the first $80,000 that you put inside the multi-currency savings account. So you can see over here, there's some criteria that you must meet to reach that 3%. It's not immediately 3%. There's some criteria. So the first 1.5% comes from insurance policies, payments, and also have minimum card spend, minimum of $500 for 0.5%, and also bill payments. So you start to see a pattern over here. You get the 3% through payments. And also, maybe you want to look at another one. We have POSB over here. You get 2%. There's no minimum payments or there's no expenses related, but it is only for the first 2 years, and it's only up to the first $3,000, 2%. Anything thereafter, 0.05. So we are looking at some criteria over here that, wow, you start to say, hey, Erwin, these plans are good, is good, 3%, but so many criteria and I must spend money to get money. What's the point? So the second instrument that we have over here is through robo-advisors. So I mentioned just now, right, SafeCash was actually at the top and recently ScriroSafe took over, right? So ScriroSafe, right now, they have an interest rate of 1.2 to 1.5%. And the minimum starting balance is $1 is basically the same as SafeCash, but there is some differences over here. So you want to make sure that before you go into any of the robo-advisors, you double check the interest rate again, because from the last webinar that we ran about 2 weeks ago, this interest rate for ScriroSafe actually dropped. Yeah, it was actually about 2%, and now it dropped to 1.2 to 1.5. So it's always good to double check the interest rate of which is the highest at the time that you're entering. So right now, as of today, we have double checked it is 1.2 to 1.5 highest for ScriroSafe. And then you start to question, like, what is the difference between banks and robo-advisors? There must be a difference, right? So Eugene has covered a small part of this just now. Banks actually have this thing called the SDIC. So for those of us that is not in the financial line, right? SDIC is actually the Singapore Deposit Insurance Corporation. So what it does is, in case the bank happens to fall, touch wood, in case the bank falls, whatever money you had inside, can be $100, $1,000, $1 million, you get back $70,000. And also banks, they lend money, right, to earn. That's how they earn, right? 3% when they lend out, they earn 3% of interest, and then you earn 0.05%, an average lah. Okay. And for robo-advisors, they do not have SDIC. They are not protected by this insurance, and their capacity is as an investor. Robo-advisors, the money that you put into their accounts, they actually invest with that money and use it to make more money. That's how you earn the increased percentage of interest rates compared to banks. Yeah. So you might be wondering, right? Then, wow, like that, isn't it very risky to put my money in robo-advisors? There's no insurance. My money is put into investments. So for ScriroSafe, right, they actually put the money in one of the UOB accounts. So it's basically just as good as putting your money in a bank, but with the rights assigned to a robo-advisor. Yeah. So another thing is, right, interest rates for banks, 0.05, quite common, right? Interest rates for robo-advisors, they can vary a lot. So just a quick look at the previous slide, right? You can see the highest we have 1.2 to 1.5 and the lowest 0.51%. But it is still better than 0.05 lah. So there can be fluctuations sometimes, but it is still higher than banks. So I always really want to put my money in robo-advisors, because in the end, they're still liquid. I still can take out my money whenever I want, but not immediately lah. 2 to 3 business days to withdraw the money. That's from my experience. So to sum up the 3 pillars of retirement that we have today, the first one being investments, covered by Yuan Tai. We have property investments, we have dividends, we have actively managed portfolios, And from Eugene, we have CPF Life, we have annuities, and as well from myself, we have the robo-advisors or the banks, depending on which one you were interested in. Can I know in the chat, which one of these 6 instruments do you think you're the most interested in and you're the most likely to be to partake in it? Can I show in the chat from 1 to 6, which of the above do you have an interest in? Oh, from Monique. Well, that is a very, very wide risk appetite you have there. Georgina, you have interest in dividends. Jackson, you have actively managed portfolios as your interest. Any other answers over here? What about the rest? What are you interested in? 2, 3, and 6, dividends, actively managed portfolios, and robo-advisors for Caleb. Okay, that's very good. So once you decide to put your money into this, it's very, very important that you always double check your risk appetite. There's high risk, low risk. Robo-advisors over here, one of the lowest risk because it's a liquid asset, right? Yeah. So, we have Mark, Wesley, and Georgina also giving the answers here as well. Thank you so much for participating. We're actually going to move on to the next segment over here because we're running out of time. We're a bit late. So there's actually a quiz that's coming up. So as mentioned at the start, the quiz, if you get the top 3, you're going to be eligible to get $10 of Grab vouchers. And Yuan Tai, I'll be passing over the time to you so that we can conduct the quiz right now. Thank you so much.
Hey, thanks, Owen.
Sorry, public announcement first. Public announcement. Hey, Jackson, can you private message me your mobile number? Yeah, because I owe you some information. Okay, Yuan Tai, please continue.
Okay, let me just get the quiz link. Just give me a quick moment. Okay. Okay, so the quiz link is now in the chat box. Please click on the link to join in the quiz, and I will share the screen for the quiz. Yes. Please join the quiz. You stand the top 3 folks who stand a chance. You will get a Grab $10 Grab voucher. Let's have some more. Let's have some more people join the quiz. It's a very fun quiz. 7 people, 8 people, 9. Let's have some more. Right. 12 packs. Can I have 3 more? 3 more to join. Wesley. 2 more to join. Click on the link in the chat box to join the quiz. ... I'm not sure what's your name. So later, if you happen to win one of the prize, you need to drop me a private message. Because I don't know who are you. ... Okay, 5 more seconds. 4, 3, last call to join the quiz. Jay, okay, Jay. Okay, Jay, I'll assume you are Jess. There are 2 Jess today, so I assume you are one of them. Okay, I'll start the quiz right now. This is some of the questions. Okay, Wesley is the early leader. Jeff Roy. Wesley back on top. JT is now in the lead, followed closely by Jeff. JT is still in the lead. Oh, Mark has shot up. look at some of the questions. Basically, content from the quiz, from the webinar. You've been paying attention. Should be able to answer them easily. Mark is in the lead, followed by Jeff. Jia Yi is number 3. Let's show the top 5. Mark, Jeff, and Jia Yi, the top 3 so far. Yeah, just give 10 more seconds. 8, 7, 6, 5, 4, 3, 2, 1. Let me end the quiz right now. Okay, we have our top 3, and congratulations to our winners, Jia Yi, Jeff, and Mark. Congratulations. Thank you for participating in the quiz. Now, if all of us can turn on our cameras, quick photo before we call it a day.
Hey, all
Please
these
turn on
adults,
your video.
all the adults bully Wesley. Horrible. Okay. Come take a picture.
Okay, turn on your videos. Show your handsome and pretty face. Oh, Jeff is really a muscle man.
Show the letter A. Yeah, A for abundance.
A for abundance. Jeff, you remind me of the One Punch. I don't know whether you watch One Punch. Okay, let's do this. A for abundance. All right. Okay, hang on. Okay.
Will be
3,
tomorrow,
2,
no, Straits Times,
1.
Yeah, your photo will be in Straits Times. Okay.
Okay, thank you very much.
Hey, good night. 恭喜发财, everybody.
Thank
Hey, sorry.
you.
Wrong
Thank
occasion.
you.